I there we go. I think that is better. Hopefully you can hear me now. Let's go back, make sure that I've got the microphone working properly. All right. Okay. All right. Going to go up to the standard resolution. Sorry about that. I had it on the low resolution, but here we are back again. There we go. Okay. So basically, the way the market is trading right now is that we're trading basically in an interesting range. I had a short on the spider this morning. I did close it because overnight it did move down. I did make a little bit of money there, but I closed it up as the market was moving higher. I just, for sake of information, I also on Friday opened a position in Microsoft, and I also sold a covered call on 100 shares. I bought 100 shares, and then I sold a covered call on it. And it has been moving higher. It's one of the only stocks right now in the Dow that's moving higher. I think we're going to be in for a little bit of heavy weather here, and I want to show you some charts just real quickly. First chart I want to show you is in the spider. This is the ETF that covers that covers the S&P 500, and it's a very important market indicator. And I just want to show you that we have indeed moved to the lower, as you can see. Oops, there we go. Not quite working on all my things here. Hold on. Let's see if I can click off that. Okay. There we go. Okay. So some of my graphics aren't the greatest, but let me just show you that on a big screen. Here we go. And basically what's happening with the spider is that, as you can see, we've moved above the 50-day moving average. It has then peaked. I think you can see that. And then it is moving down. Now, the real test is going to be if it moves below this line. If it moves below this line, then we'll know that we're in a confirmed downtrend. But currently, we're in a confirmed uptrend. And that is basically a technical measure. And that basically means that we are off of the lows we corrected on March 23rd. Now, right now in the market, the NASDAQ is up. But as you'll notice, the S&P 500 and the Dow Jones are both down. And so basically it's a very, very mixed market. The market isn't in a confirmed uptrend. What that means is it is a confirmed uptrend from where we were trading basically on March 23rd. Now, of course, the market moved down almost 35% from the high down to the low, and the low was made on March 23rd, and it's when the spider hit 218. So I am looking for a movement of the spider back down to retest that low, and that's really, I think, what's beginning here now. The earnings are starting to come out, And as we suspected, because unfortunately of the large amounts of unemployment out there, we're looking at a situation where now we're going to have a situation where some of the earnings are going to disappoint, and I believe that we're going to move a bit lower. We're going to move a bit lower, and I think that's just the way it's going to the way it's going to the way it's going to work out. So I really wanted to get that out there and show you that there is ways to make money in the market. Now, I issued an alert this morning on TikTok, basically for everyone to get into cash. The reason I believe this is because I do believe that after these earnings are out, we're going to come into a period that's going to be very difficult to trade, and it's best if you are in all cash right now and very, very short term oriented, because I do think that there are going to be situations that come up that have great potential, and I'll be showing you a trade that I just put on here today that may yield some fruit, hopefully here coming up. So let's see. SQQQ time. Good question. For everybody that out there that doesn't know this, the SQQQ is a special purpose ETF, and the way this works is it basically helps you short the market. It lets you it lets you move against the market without having options capability in your account. Now, typically, most brokerage accounts have levels of accounts. There's a level 1, level 2, and level 3. If you have level 3, of course, you can short stocks, you can do all that. But if you have an account that doesn't have that capability, for instance, 401ks or other retirement accounts, you are not allowed to short stocks in those accounts, and you don't have any margin to trade on anyways. And this is what you need to short stocks. So there are these ETFs that basically do the shorting for you, and one of them is called the SQQQ. And the way this works is it takes a position against the index of the S&P 500. And the way that works is that the more the index goes down, the more the SQQQ goes up. Typically, for every 1 drop in percent on the S&P 500, the SQQQ will advance three times that. So if the S&P 500 falls 1%, typically the SQQQ will move up 3%. Now, here's the rub on this. It's very volatile, so it can reverse very easily on you and give you a situation where you have a problem and you cannot recover from that. So if you do use the SQQQ, be very careful and use it very carefully, because it's best on the SQQQ if you've made if you've made a gain, is to take those gains relatively quickly. Don't use the normal rule where you're going only for a 20% gain. So I just wanted to put that out there. So let's see. We have some people also. Let's see. Okay. For some reason, I'm having trouble on Periscope today, broadcasting, but I'm going to go ahead and show you some comments that's coming in from YouTube. So here we go. Let's see who the first comment is. And that's okay, great. Let's see if I can, let's see if this will come up here. And I can show that, I can show this comment here. Hold on one second. Oh, okay. Let's see. Hopefully you can hear me, and we're all good to show. I'm having a little bit of bandwidth issues here at the here, and it's not, for some reason it's not showing. So let's see. Let's go back here to see if I can show you the comment. Come on. All right. Well, there we go. Oops. Yeah. All right. So, anyways, sorry about that. Sorry about those technical difficulties. I'll just have to go. The best I can here. All right. So, all right. Let's see if I can show that. I should be. Oops. Should show comments here. Well, heck. Okay. Let me see if I can. Let's see if I can move to a different. Oh, I apologize for this. All right. So let's see. What about the tweet on Tesla? But it's up today. Yeah. Here's the thing about Tesla. I did move out of my Tesla positions when Warren Buffett when Elon Musk tweeted. And I fortunately I had hedged my bet. I sold a covered call. I was able to basically buy that back for 40 cents. I sold it for $46, which is good. Tesla did go down, and that was not the best situation, but but I did close that position out, and I went into Microsoft. That was sort of my move on that. So let's see if I can get a. There we go. Finally. Okay. Good morning. What a smart move from Bob, and he sold all of his airline stocks. This is a head fake. I really think you're right. I think we're going to have RJM. I think you're right. I think we're going to have a situation where we're going to have a massive retracement. And again, look at the spider. As you can see, it's rolling over. Once it crosses below that 50-day moving average, I think we're going to go down and we're going to test. And this right here where I'm pointing, this is 218. It was on March 23rd. So that's definitely true. I think we're going to see that. I think we're going to see that with the spider. Now, I want to show you a trade that I believe that you can make easily and will help you in coming through this earnings season. There are some very good potential trades here, and this is a trade that I put on this morning, and I kind of want to just show it to you for for illustration purposes. And that is, it's a bear call spread on Disney. All right, Disney currently, when this slide was taken, was trading for 101.75. The theory on this is as you can see, it's moved down below the 40-day moving average, meaning that I believe the trend on Disney is going to be down, and they're going to be announcing earnings tomorrow, but I don't think that the earnings will be really too good. As a matter of fact, as you can see, there's been a lot of movement out of this stock. It's down $3.55. Now, here's a play that you can make some money on this, and this is called a bear call spread. And the way this works is basically what you do is you purchase, you sell options at below the price, and then you purchase other options. So here's how it works. You sell to open 10 contracts of Disney. Now I'm using the May 8th weekly call, and then you buy 10 contracts of Disney on the same expiration date. Now here's what that does. The lower of the two is going to pay more money, so therefore it's going to subsidize the buying of the higher strike price option. Now, if the shares of Disney close below 101, none of the calls will be executed, and you will keep the $437. Now, if the stock closes above 102, then the call options on the 101 call options will be executed, and then because you have purchased call options at 102, the difference is $1, which if you have 10 contracts, of course, is going to equal $1,000. So you have a liability of $1,000 if the share price of Disney closes between 101 and 102 tomorrow at the closing bell. Now, because you've already collected $437, this is the actual amount, your total out of pocket would be about a little bit over $500 is what your potential loss is going to be. But if it closes below 101 or above 102, then your potential gain is going to be this amount of minimum of $437 up to $1,000. So if it closes, for instance, at 103 or 104, you're probably going to make close to about $1,000. So this is a potential trade that you can make during earnings season. It's called a bear call spread, and this is the one I have on for tomorrow. And I'll give you a little bit more information on it here. Let's see if I can move to the next slide. Come on, baby. All right, let's see if I can move to that next slide. It's my machine is slow because the internet's slow. I do not know why it is, but it is. So there we go. Okay, now here is the IBD 10. Now, here's the thing. This is derived from the IBD 50. These are the 50 best growth stocks as compiled by the Investor Business Daily, and I think it's really interesting to look at this. None of these I'm really that excited about going long. Well, there's one that I'm excited about being long. If you'll notice, they're all up today, which is good. AMD is up. It's been kind of moving around that 50, 51 area. Netflix, of course, is perpetually one of the best stocks. V, the stock that I've traded quite extensively, just for just for disclosure, I'm not currently in the stock. And then we come down to a company that I'm very, very interested in. It's number 5 on the list. It's called FNV, or Franklin Nevada. Now, this company basically takes positions in gold miners, and it has been very successful. I believe this is the best to breed in terms of the gold stocks. Now, Why am I interested in gold stocks? Well, normally I am not a gold book. I don't think there's that much utility in gold because you basically dig it up and you store it and look at it, and it doesn't really sure, except for a few things in electronics, it doesn't really serve many purposes, unfortunately. The thing about it, though, is that there is going to be more demand for it because as people get more and more skittish about the market, because I do believe that we're going to see a sell off, I think that there's going to be more interest in gold and in the gold stocks. Now, currently, the two gold stocks that I'm most interested in is currently the two stocks that I'm most interested in the gold area are KL and Franklin, Nevada. KL is a Canadian gold miner that primarily mines gold in Australia. Now, the reason this is significant is because 30 years ago, most of the action in the gold business in terms of mining was in South Africa. Unfortunately, they're not in a position like they used to be. And so South Africa, in terms of being a major gold mining country, is much less than it used to be. So most of the action has moved to Australia in terms of gold mining. And so this company KL is typically a very good company. Now, it's not currently on the IBD list, but it is in the IBD 50. So that's one thing you want to look at. But Franklin, Nevada is probably the best of the best because they take positions, junior positions, in other companies like Barrick, which is a big gold miner in the U.S. and other ones. So that's one to look at. If you're going to be long at all, and I don't really recommend it in this market, I think that unless the stock is extremely good, I don't think you want to be long in this market. This is a market to be in cash or being short. That's sort of that's sort of my view on this, is that it's time to be in cash, it's time to be short, but it's really not a good time to be long. And so basically, if you're going to be long, but if you're going to be long, and if you want to be long, you want to be long stocks that I think have legs. And I definitely think that's true with, with these stocks like Franklin, Nevada. So enough of that. Let's see if we have some questions. What about the tree? Okay. Momentum 20. The Feds are making it really hard to do options in the market. They are, absolutely they are. Because they're going against some of the ETFs. They don't like the fact that people do trade options on the ETFs. There's a lot of issues there, but you still can do these spreads you still can do these spreads. For instance, I did a spread on Apple last week very successfully. It worked out extremely well. Apple closed below. Everybody thought Apple was going to advance on the news. It didn't. So my bear call spread worked, and so you can do those. But you're right. I mean, the reason that they're trying to shut down a lot of the options market is because it's creating these swings in the market that they don't particularly like. The Fed has indicated that they're going to do anything in their power, basically, to move money into the market, and that's why you're seeing these tremendous, you're seeing these tremendous numbers in terms of buying in the market. They're currently, the Fed is not buying equities, but just about everything else. They're buying high yield bonds, which really are junk bonds, and just to support the market. So the Fed is basically turned on the spigot. Now, the flip side of this, of course, is that they're trying to prevent deflation. That's sort of the big fear, because we've shut off the economy due to this coronavirus. It looks as if they're going to do whatever it takes to remain for the market to remain liquid. The problem with that, of course, is that the flip side of that is eventually you have to pay for that. And the way you can see what's going to happen is if you take a look at Argentina, when they have done things, they have gone into these deflationary periods where the economy doesn't have demand, and then they inject a lot of liquidity, they borrow money, and then the flip side of course, is hyperinflation. So this is the reason why you're seeing people getting interested in the gold shares, because they see inflation coming on the tail end of this. And I think that that's going to be true. But right now we're in a deflationary situation. We don't have enough demand. Oil is closed again below $20. And we have a situation where I think it's going to be, it's going to be difficult. It's going to be difficult. So that's kind of that's kind of where we're at in terms of the market right now. One thing that you have to be very careful about in this market is preserving capital. So this is why you need to be very careful about putting your stop losses in. If you're going to go short on anything, you need to set your stop losses at 5% above where you paid for them. So for instance, if you sell if you sell something at, let's say, $100, you want to set your buy to cover at 105, 5% above. The reason why is because shorts typically unwind faster than long. So when you see these massive movements in the stock where it goes to the upside, for instance, Tesla is a really good example. These are not this is not the result of panicked buying. This is a result of short covering. Okay, this is what causes this. So if a short unwinds, if a short position unwinds, it unwinds very quickly, and the market mechanically will buy into the market, causing these blow off tops. This is part of the process of the stock market in general moving down. So if you're going to short the market, be careful, set your stop losses 5% above where you paid, where you sold the stock, and make sure that they're in there, the buy to cover, and that you have you have market limit order. You have limit orders on these, so that when if there is a blow off top, you are protected, and you're not in a situation where you can't get out of the trade. That's really, really important. All right, so let's see. What do you think? Is FANG a good buy? Well, FANG, we're talking about diamond. There's a stock out there called Diamond. I don't like any of the oils right now at all. I just think that they're far too risky in terms of their setups. I just don't think that they're the right thing to be. You know, money in these, but with the price of oil so uncertain, I just don't think that you want to be in that sector at all. I mean, you know, I kind of figured that oil would have bottomed, but I don't know if it really has. I think that there's just a lot of deflation in the market right now. That's the reason, by the way, Warren Buffett is going to cash. It's not because he's in love with cash. It's because in a deflationary market, cash actually appreciates. I know that's a hard thing to sink in, but holding cash in a deflationary market is actually a good investment, because the way it works is that because prices are falling, cash will buy more of everything later on. So therefore, cash is actually a better investment than many other things. You'll also notice that there is very little, the 10-year bond is paying very little. And the reason it is because they're trying to push cash out into the general market. Now, unfortunately, this is not going really to Main Street. It's going to Wall Street, because that's sort of how it works. I mean, that's the place that can receive these tremendous out and inflows of capital. And I think that what you have to look at very carefully is that in a deflationary economy, it's kind of a Alice in Wonderland situation where having cash is actually a benefit, whereas most of the time, if you have cash and you're not investing it, that's really not a good game plan. So, but right now, I think you want to be handling. You want to be keeping your powder dry, because there will be opportunities, but typically in a deflationary market, in a bear market. Now, not all bear markets are deflationary, but we have a lot of deflation right now in the market. We absolutely do. So we have to be leery about the market, in that we keep our powder dry. So the two positions you basically want to be in, unless it's a stock like Microsoft, just absolutely solid, is that we want to be in a position where we're either all cash or we're short. That's the reason why I'm moving into option plays more than being long in the stock. So that's really the reason that I wanted to show you that option play that I was making. Now, I make these typically when earnings happen. We're in earnings season right now, and I do believe, unfortunately, that most of the earnings are going to disappoint, and this is going to cause the stocks to go lower. If the stocks go lower, of course, with these spreads, your chances of winning are very, very good, because typically you're basically selling on the news, and you're buying back at lower price, on the reality. So that's really one of the best things you want to do. Do you do one-on-one? I haven't been doing one-on-one mentorships, but hey, I wouldn't mind getting in on that. What I'm trying to do for everybody out there is I'm trying to build my list, so that I can give you an idea of kind of of stuff for free. I mean, why not? I mean, I pretty much learned to trade trial and error. But you know, but I actually had a mentor, and it was really a great thing. It was a long time ago now, and unfortunately, the gentleman is dead. But he helped me a tremendous amount, and he showed me how to do these spreads. And this was back when the QQQ was starting out about 25 years ago, and it served me well over time. So what I'm trying to do now is I'm trying to create a mailing list and possibly give some stock alerts, and then hopefully when this thing gets back all together, hopefully get an intern so that we can push out a lot of this stuff. You don't have to have a lot of money to start trading. That's the absolutely amazing thing about this. You just don't. I mean, you all you need really is just a small account and maybe $10,000 or so, and you can start trading and making money. That's what I started with. I started with a very small amount, and now you know, through the years I've made and lost money, but I actually, you know, you can actually make a living on this. I mean, a full-time thing, believe it or not. I mean, I mean, I don't think you're going to be Warren Buffett overnight, but you know, it's amazing how there's always ways to make money in the market. I mean, I got up this morning and I was like, wow, I'm looking at the market falling, so I know I can make money by shorting the SPY. I short the SPY for 30 minutes, boom, I buy it back, and I've made a little bit of money. I mean, I haven't, you know, made a home run, but I've made some money. And you can do that over and over and over and over again. So, you know, it's just over time, you'll see that this is actually a legitimate way to make money. So that's just something that I wanted to share with you all. Okay, so what do you think about Forex trading? I am not a Forex trader. I'll be honest with you on that. I am not a Forex trader because I think that Forex tends to be manipulated a lot more by governments. It's a more difficult trade. Oh my goodness, I'm sorry to there we go. There we go. I'm sorry, I'm back. I'm having a lot of difficulty with bandwidth here today, so I apologize for my lack of bandwidth here. But it is what it is. So maybe my settings will improve for tomorrow. Anyways, so let's see. Okay. Trick control to follow the okay. Yes, you can do spreads with a low amount of capital. That's one of the great advantages of a spread, is that you do have to have level 2 authorization typically you do have to have a margin account. So I think you have to have level 2 option capability. I use TD Ameritrade, so it's a good way to go. But I think the minimum to have, I think the 25,000 is the minimum for the. I think 25,000 is the minimum to have margin capability. But I think there's some that allow that with 10. I think Schwab I think you can get it with 10. I'm not sure on that, but yes. Unfortunately, like many good things, they restrict these great money making capabilities to other people, and it sort of sucks because it shouldn't be that way, but indeed it is. So, you know, I mean, how can you just have to scratch your head sometimes and go, man, they're reserving everything really for everybody else. So, but yeah, I would look into that. You need to have you need to have margin capability